All right, everyone, I'm going to try to explain this as easy as I can. I see a lot of people overcomplicating the situation, bringing in things that we've never talked about. Some are even making excuses about the strategy not working. Trust me, it works. What we're doing wrong is very, very minor things. However, if fixed, it'll change your performance ability quite a bit. So just clear your mind and focus on what we're doing here. We're not trading here, we're exploiting here. Remember that. Clear your mind and realize that everything around you in the Discord is there to help study the coming storm, not to pick plays. To pick plays, very, very, very simple. Step one, the indicators that you use. Very easy. The RSI on the 14-day time frame, always on the daily. Always. This is an RSI, the only indicator that I use as of today. This is calls below 30. Whenever this line goes below the 30 mark, it's time for calls. 90% of the time. When it goes above this line, 70, albeit it does take a little bit longer. However, that's why you go a little bit further out in the money. And again, RSI over 70 is put time on the daily. Every single time. Do it the same every single time. Now, we didn't even look at a chart. Now let's add the chart in. You can clearly see if matching up these RSI when they are over or under these lines, you would have made profit every time. The problem is that if you drill down onto one of these candles, there's more psychology there. This is the daily. But if I drill down, you're going to see more candles within this candle. If I go down to like the 30-minute. All that matters is what you're doing between this point here and this point here. Because while it may seem like you're going to lose all your money if after 5 minutes the price goes against you, it's not the case. There's only one exit strategy, or actually two exit strategies that you should be utilizing. Number one, exit if pushed out of the money. Number two, exit if in profit. That's the only two. Very simple. Now, broker of choice, I've been saying this since the beginning. Webull. I hear a lot about people paying fees per option trade. That's a detriment to your success. Also, Webull offers real-time quotes. They have great option data, and they, most importantly, automatically chart gaps for you, which, again, is important. I've stuck to Webull this whole time. Again, I've been consistent this entire time. The only thing I've done is narrow down the logic to make it even easier. Now, they have premium data from SIBO, Hanweck. Greeks are real time. IV is updated every 5 seconds, and volume is real time. Open interest is daily, as is every other broker. This is the main reasons why I like it, and I also like the chart setups. Now, this is why you are losing. There's a few reasons why you're going to be losing trades. Number one, you're buying the asking price when playing long calls or puts. Never do this. Set up your option chain correctly. This is the way to do it. So the optimal way to set it up is you want to log in, and if you're on a phone, it's a similar process. You want to make sure that the ask price, just take it off your screen. Don't even look at it. Put it out of sight, out of mind by dragging it off the screen. Next, what metrics do you want on the screen? Well, we have volume, open interest, mid-bid, implied volatility, delta, gamma, and theta. But first, make sure you have all the strikes showing by going up here. Now this is your option items. You want volume, open interest, mid, bid, implied volatility, delta, gamma, theta, and ask. Ask at the very end, out of sight, out of mind. I only look in the options chain to gauge open interest and volume and implied volatility. That's it. And implied volatility only to see if it's low, like STZ, 26%. That is extremely low. That is why STZ was recommended as a call play. But again, very simple. You got to make sure, number one, you're set up correctly. Number two, you have the ask out of sight, out of mind. Number three, you're not over analyzing all of these numbers and data. You're only looking at open interest, volume, implied volatility. Everything else, I don't even really look at it. Now, number two, another reason why you're losing trades. You're on a margin account and you don't have $25,000 in your account. How on earth could you possibly win if you're limited not only in your trading, but in your psychology to only be able to trade 5 times per or 3-day trades per 5 business days? It's impossible. Unless you're over $25,000 in your account, get off margin. It is going to trap you to where you cannot win. You need to be able to exit your trades when you need to exit your trades. You need to be able to reset when you're able to reset. There's no limitations on cash other than you cannot sell with unsettled funds. You can still get out of trades though without worrying about losing your account or getting locked out of day trading to where you can only buy and then you can't sell that same security again for another day, or you risk losing, your account for 90 days. This shit is stupid. This is probably the main reason why a lot of people aren't finding success, is if they're on margin and don't have the capital requirements to get unlimited day trading. Switch to cash. It will save you thousands of dollars. Number 3 is just your overall psychology. Look, I get it. A lot of people are in other groups. A lot of people are doing other things. But you got to keep in mind, we're not trading here. We're exploiting. Our strategy is an exploitation strategy, and we're utilizing macroeconomic factors and events, and of course the repo market, which no one to this day still understands, which I will be explaining in more detail soon, for the 10th time. But that's what it's all about, is reiterating stuff, making sure everyone gets it. The repo is why this situation is occurring. There's no liquidity in the market. They're holding it all, and they're going to release it on their time frame, and it's going to be a cyclical process. They're going to be shorting the whole market, and then they're going to be covering it through the SFT. This is a fact. We're at the point now where we cannot let others influence our decisions. Whatever John on Twitter says, I give 2 shits about, because John on Twitter is a lazy fuck and hasn't done any work to verify his claims. That's not the case here. We have the work, we have the track record, we have the credentials, we have the time put in, and not only that, we have the success rate to prove it. So again, it's all user error. These are the plays that were in the playbook today. You're overcomplicating the strategy is point number 3. It's not complicated. If the RSI is oversold, buy calls. Don't rush your decisions. If you're going to go calls on a broken RSI, that's why we play monthly options. If you're playing weekly options and you're expecting the RSI strategy to work, it's not going to work. It only works on monthly expirations for the most part, with a few exceptions. The reason for that, it's very simple. There's less options on monthlies than weeklies. If you have more options, you have more things or methods you could use to manipulate the liquidity. Not the case with monthly expirations. So again, the playbook, I added all of these plays on the 17th, 16th of this month. I played them all again today just to prove a point. This shit works. In the money, always. If you're buying out of the money contracts, you're going to lose more than you win, period. The easiest way to do it, if you buy in the money, guess what? If you get pushed out of the money, get out of the trade. If you are in profit, get out of the trade. You either get out and you save money, or you get out and you make money. One of the two. Hit all the plays in the playbook, bought right off the open. And I mean, again, 85% chance if you do it the same way every time, no matter what. And this is a killer. I don't give a fuck what Boss Blunt says. He's an idiot. He lies to his followers, and he doesn't know what he's doing because he hasn't, again, put the work in. You don't buy out of the money calls unless you are certain that it's going to move and move fast. Because when you buy out of the money calls, guess what? Now you're incorporating the rate of change into your play success. If you're in the money, you have an intrinsic value shield that will protect you from theta. The second you go out of the money, that shield is gone and theta will eat your ass faster than some reference that I probably can't say on YouTube. But again, stop buying out of the money calls. And if you buy in the money and quickly get pushed out, consider yourself lucky, because now you can exit with minimal loss and go find the next opportunity, because they're fucking everywhere, which is why I hate playbooks, because all of us should be able to have the ability to go into a chart and find a broken RSI to the upside or downside buy the respective direction, and then sit patiently and wait in the money. That's literally all this is. Now let's add the charts. So I added Lin on 6/17. Why did I add it? One fucking reason. The RSI was oversold on the daily, so I put it in the call books. Next, we have... Oh, I didn't change the name. This one it was the same chart, actually. I didn't change the name on any of them. Son of a bitch. My bad. Lin, this one was USB, I believe. And this one is T. But look, one thing, RSI. MACD, fuck the MACD. We don't even need it anymore. We only needed it earlier to find what was the truth. And what the truth is, gaps in RSI. So Lin, gap broken down. Daily RSI. USB, daily RSI broken. Look, it went up. T. This one was only slightly oversold, but it still worked. You know why? Because it's just how it's happening with the liquidity situation in the market. You don't have to believe what I'm saying. Believe my results. It works. If you do it the same way every time and you exit under the same conditions every time, always take profit, always exit if you're pushed out of the money, do not sit and buy and hold options. This is not AMC. This is not GME mentality. This is actual trading. You cannot sit on contracts, especially if you're out of the money, because you will lose unless you get lucky and the stock moves. And it has to move fast. So if you're in the money, you take the speed at which the price has to move out of the equation. You're only worrying about direction if you're in the money. So keep that in mind. Not only does the strategy work, it works 85% of the fucking time. I can verify this. All you have to do is follow the very simple process and stop being impatient. Stop not taking gains. Stop buying the ask. Find your own plays even. Utilize the oversold and overbought RSI screeners that I've created. You don't need playbooks. You're going to miss opportunities. Go find daily RSIs, broken upside or downside. Buy them a few weeks out, monthly expirations. You will win 85% of the time. And those 15% plays that lose, you'll lose with minimal loss because you'll get out the second you're pushed out of the money. So don't buy the ask. Don't chase plays. Find your own plays utilizing the screeners. Set up your options chain with all the strikes and option types demonstrated in this video. Take profit, win in profit. Exit if pushed out of the money. Daily chart only. Stop overcomplicating the strategy by bringing in outside logic. I trust nobody because nobody else has put the work in. And think about it. I did all this work and all this shit just to tell you to buy a broken RSI. That's what it's all about. That's all trading is. For the time being. For the next 8 fucking months, we can exploit this. I want to see everybody making money. This is the way you do it. Right here for the next 8 months.